What if the American dream of owning a brand new vehicle is officially dead and gone? The United States automotive market is quietly crumbling right before our eyes, and the reality inside local dealerships across the nation right now is absolutely terrifying. In 2026, the average transaction price of a new car in America has officially crossed the staggering $49,000 mark, forcing the average monthly car payment to skyrocket past an unprecedented $760 a month. Think about that number for a second. That isn't just a standard car payment anymore. In several states, that amount is equivalent to a secondary mortgage or a luxury apartment lease just to drive a basic, plastic-heavy, mass-produced compact crossover. Dealership lots from coast to coast are silently overflowing with unsold inventory because American families are completely broke. Inflation is eating away their savings, and major banks are aggressively tightening their credit requirements. Total U.S. auto loan debt has just smashed through a historical, terrifying record at $1.69 trillion, and nearly 5% of all active car loans are now seriously delinquent. People are defaulting on their vehicles at rates we haven't witnessed since the height of the infamous 2008 financial crash. If you walk into a franchise dealership today, sales managers are quietly panicking behind closed doors because the traditional American middle class has been completely priced out of the market. Buyers who used to easily qualify for prime financing rates are now being flat-out rejected by underwriters, or they are being forced into predatory, financially ruinous 84-month or 96-month loans with double-digit interest rates. These catastrophic loans trap hard-working people in negative equity for years, owing tens of thousands of dollars more than what the vehicle is actually worth. This massive, unprecedented financial squeeze is completely altering consumer behavior across North America. The general public is finally waking up to the reality of high interest rates engineered by the Federal Reserve, and they are realizing they can no longer treat vehicles like disposable, lease-and-dump electronic appliances. Consumers are rapidly turning away from overpriced, overly complex, tech-heavy crossovers that are designed to fail, and they are desperately searching for vehicles that offer genuine mechanical longevity, structural simplicity, and real, tangible value for their hard-earned dollars. This exact macroeconomic crisis is precisely why a highly precise, driver-focused machine like the Mazda CX-50 is starting to completely disrupt the compact SUV segment. While mainstream giants like Toyota and Honda continue to abuse their market monopoly by inflating manufacturer prices, allowing dealerships to tack on thousands in illegal market adjustments, and forcing desperate buyers onto massive, months-long waiting lists just for a standard, uninspired RAV4 or CR-V, Mazda is deliberately taking a completely different path. Instead of overpromising on cheap digital gimmicks, piano black plastics, and giant distracting touchscreen displays that will inevitably glitch out and become obsolete in less than 5 years, vehicles like the CX-50 prioritize solid, heavy-duty mechanical engineering, standard, robust all-wheel drive capability, and high-end, tactile interior build quality that is actually engineered to endure decades of daily abuse. It addresses the exact core values that financially strained American buyers are searching for right now: mechanical dependability, analog usability, physical buttons that you can operate without looking, and a well-balanced chassis that actually feels premium, robust, and connected to the road. The era of blindly overpaying for uninspired, numb, appliance-like crossovers is officially coming to a brutal, necessary end as the massive auto credit bubble begins to burst. Dealerships are already seeing a wave of repossessions hitting the wholesale auctions, causing used car values to plummet and leaving millions of current car owners completely underwater on their loans. The manufacturers who built their entire business model on cheap credit and infinite price hikes are about to face a massive wake-up call as American consumers simply say no more. Think about your own family finances and the state of your local economy for a second. With the national average payment sitting at an insane $760, at what specific monthly price point does a standard vehicle become completely unaffordable for your household budget? Drop your current city, your state, and your exact monthly car payment down in the comments section below so we can map out how bad this crisis really is. Are you planning to risk trading in your current vehicle this year and taking on a massive interest rate? Or are you holding on to your current set of keys until the wheels completely fall off your car? Let's start a real, raw conversation in the comments section below. Make sure to smash that like button to help beat the YouTube algorithm, and subscribe to the channel right now for more honest, unfiltered automotive market breakdowns.